We can do it for you, and yeah, you'd still have the control. But I just think sometimes to understand it better, we would show you how to do it, and we are there to help if you need any help. But actually doing it yourself gives you a better understanding of your business and how it works. And we will do it. Some people try and do it, and I mean, QuickBooks, it makes it out to be easy, and it is easy if you know what you're doing, but you've got to know what you're doing.
Hello and welcome to another edition of the Director First podcast. And today I am being joined by a colleague who I have got to know over the last few years, who provides a fantastic service out of Yorkshire, covers the whole of the country. It's Jo Gardner from JLS Accountants. Jo, welcome to the podcast.
Thank you. Nice to be here.
Eventually, it took some doing this, didn't it, to actually finally get the technology to work. Jo, listen, I appreciate your time, and obviously I want to dive straight into it. Really, tell us a little bit about you, about your background. Tell us a little bit more about JLS and how it all come together.
Blimey, I kind of just fell into it. I saw when I left school, I went into a job in a recruitment agency, and we were just doing wages and invoicing. And they decided to put me through my AAT, so I started studying as well. So while I was studying it, I had a family as well, so we're all like busy. And I was working for an accountants in Leeds, and somebody just approached me that I'd worked for before and said, "Would you like to set up together?" So we did, and that was a company called Magnum. But it didn't work. And rather than go get another job, I just walked away and started working from home in 2013. And it kind of just went from there. And then I got a shopping mall, and it was just a little shop, a little room, £175 a month. It was brilliant. But it had a shop front, and people were driving past all the time. And from there, it's just gone mad, absolutely mad. So I've got 5 members of staff now.
Brilliant. And how many people do you look after?
Around about 450, 500 now.
Wow. And although you're a Leeds lass, and that's where you're based, whereabouts do your clients come from? Because it's not just Leeds, is it?
No, I've got quite a few in London, funnily enough, because I've got a friend who's a PT, and she kept introducing all her clients. Matlock, Buxton, Blackpool. They're all over the place. And
Blackpool, well, that's near me. I'm in Kirkham.
Thornton Cleveley's.
I went for dinner with my mate yesterday from Thornton Cleveley's. God's Waiting Room, it's called.
Is it?
I mean, I think we get a lot of work in London. I mean, most of our work pre-COVID used to be sort of London M25 because listen, that's where the fees were. That's where the money was. And I've always found, and I don't know if you get it, is people say, "Chris, I don't know what it is, but I trust your accent," and it's like, it's
like they just trust you because of the way you talk, and I don't know why. I don't. Yeah. I mean, obviously we're cheaper up here as well, aren't we?
Of course we are. Well, listen, my office it's on the glamorous location of Preston Docks, so I don't have that Spinningfields Manchester address or the City of London address. It's and yeah, we can cut our cloth accordingly. But I've always found that really odd that's what like the Southerners say. They say, "Chris, you've got a really trustworthy voice." I hope that's not only what they bear that make the decisions on, but it's nice to hear. So, Jo, let's get stuck right into it. You deal with a lot of different types of businesses. You've been doing this job for a long time. What accounting processes do you think are crucial for small business owners to understand?
Firstly, I'd always say make sure you get a bookkeeping package.
Yeah.
Don't think that that's going to do everything, because it doesn't. You still need to understand what you're doing. And it's like bookkeeping for a start, making sure you know how much you're owed in, how much you're owed out, how much cash you need at the end of the month, how much cash you've got outstanding, making sure that you keep up with HMRC, because that's what kills most people. So all your tax compliance and understanding that. And if you don't understand it, or you can't, I've got a lot of clients that Google, they love Googling, and they'll come up with something. And it's like, well, is that right? And then you've got to think, oh, well, yeah, maybe. So fair enough if you want to Google. But I would always, if you're not 100% sure, always use an accountant. We're not massively expensive, but we will save you money, because it's just knowing what to claim, what to look out for. Always, what's the difference between cash flow and profit? Because that's a big one.
I'm gonna come to that. I'm gonna come to that in a minute. Yeah, just hold your beans.
Understanding that's absolutely crucial. And understanding your financial reports. A lot of people don't understand what they're looking at. We get clients that you send their accounts out and they just sign them. They don't even look at them. And it's like, well, do you understand what I've sent you? And they'll go, well, no, not really.
It's funny. I mean, the Google thing, right? Obviously, I get that in my industry so much, and it's like I will ring someone after they've made an inquiry, and like insolvency, it's people shop around in insolvency, and they should do. You know that they'll probably speak to 3 or 4 people, and there's some really good websites on the internet, but the problem is if you go to like the Insolvency Act, like everything you're doing is going to end you, put you in prison or basically get you disqualified. It's like, and they'll ring me and they'll be like, well, Chris, this, that, and the other. I'm like, well, I hear what you're saying, and yes, to the letter maybe, but the practical application of what you're going through now, you cannot learn it on Google. You can't learn it on YouTube. You've got to go to somebody and go, right, this is my company. This is the list of debts. This is the issues that we've got. These are the assets that we've got in the background. This is the legal action pending that we've got. And what do I do? And that's what you're saying. It's like, I think people are really scared to pick the phone up to people definitely like me, perhaps less so with an account, but I don't want to stereotype them. Of course, listen, my mates are builders, right? They're like mainly in construction. And one rang me the other day about a question. I'm like, listen, I'm the wrong guy to talk to about this. I says, why don't you ring your accountant? And it were like, oh no, I don't want to do that, Chris. Don't want to bother him. I'm like, it's an accountant question. So it's like, and you're very easy. I mean, I speak to loads of accountants, Joe, and some are hard to talk, fucking hard to talk to, mate. You've always been easy to get on with. Why do you think that is? Why don't people pick the phone up to the person who they're paying for the advice for?
Because I think sometimes, I mean, I suppose I could be a bit of an exception. I'm quite down to earth. I'm outgoing. I'm not like I know everything and you know nothing. And a lot of people can be, can't they? And they get told off. I've had quite a few clients come to me saying that they got told off, and I can't claim this and I can't claim that. And she said, I can't do this and I can't do that. And I always say to them, you can do whatever you want, and I'll advise you on whether it's the right thing to do or not. And then it's up to you to make that decision. It's not me that'll get into trouble at the end of the day. It's you. If you want to do something that I don't 100% agree with.
And that's what people don't realize. I had dinner on Friday with one of the insolvency practitioners, and we were just having a bit of a giggle, really, about other firms, and what you'll generally get in insolvency is an insolvency professional will come on a call, or they'll go and visit a director, and they'll quote the Insolvency Act at them. And just imagine you've got a builder from Bradford, right, who owes some HMRC. Nothing against builders or Bradford, by the way, right? It just rhymed off my tongue. And you start quoting the Insolvency Act. This guy is going to freeze. And it's like, he doesn't understand that. And nor does he need to understand that. What he really needs to understand is what his options. And that's sort of, we've sort of built our whole business on that niche. It's like, listen, we understand the, the intricacies, but a director doesn't need to know in 90% of the times. It's like, okay, here's what's going on. Here are your solutions. If, like you, I say, you've not appointed anyone at the moment, but if you do that and you then come to us in 6 months' time, or you do that and you go into liquidation, that is on you, and there's going to be issues because directors don't. Do you know one of the number one complaints I get off a director when I sort of go, how have you got into this mess?
What is
it? It's my accountant's fault. And I'm thinking,
so it's your accountant's fault.
Of course
always.
It is, yeah. But they don't.
I can't tell you how many times I've said to people, I only tell you how much it is. It's not up to me to pay it. Because so many times it's like, well, you didn't tell me to pay it. No, I gave you the information when it needed to be paid. It's not up to me to remind you. I've got another 400 clients.
Yeah.
They're just, but it's always our fault.
And for me, I mean, you've touched on it really. It's like, I mean, let's go back to it. Bookkeeping, just for people that don't, because so many people, they don't understand what bookkeeping is. That they literally think an accountant is somebody who will do everything for you for that 1,500 quid a year, right? You'll get management accounts, walk you through the profit and loss, cash flow projections. Why are they confused? Tell us the difference between what you do, Joe, like the stuff that a director has to do every year and what that is, and the stuff that they should be doing extra with an accountant. Because there'll be people on here, when you said bookkeeping, will be going, I don't know what she means.
So we've got quite a lot of clients where we do the VAT returns and they do their own bookkeeping. We just check it at the end of every quarter. So like, say for instance, if you've got QuickBooks, because we recommend QuickBooks because it's quite easy going. It's bookkeeping is you put all your invoices on that everybody's sent you, all your invoices that you're sending out. So you've got your customers and your suppliers, put all your invoices on. Then you connect your banking and match all your invoices to your payments. So like if you do that, and we're doing your accounts, then obviously it's not going to be a massive chore for us. We've just got to go through the processes of, looking at them, making sure everything's reconciled, and then basically working it out and telling you how much you need to pay. But when you're actually doing your own bookkeeping, it's cheaper because if you give me a bag of receipts, I then have to sit there and go through a whole 12 months of your sale. Well, some people don't even give us sales invoices, they just give you bank statements. And it's like, that's so much more time consuming. And actually, that's not what we do. Our job as an accountant is not the bookkeeping, it's the after. So, and when we do bookkeeping, we don't do a full on, like all the, your debtors and your creditors, which is something else, age payable and age receivable, that a lot of people don't tend to understand. And it's like, we don't do that. We'll just put everything on, all the sales, all the purchases, anything else that's going through, and we'll just reconcile everything, do a set of accounts, tell you how much you owe. But if you want to manage your business properly, and then you would need to do your own bookkeeping. So at the end of every month, you can look and think, right, how much cash have I got in? How much do I owe out? How much am I owed in? Do I need to get money in quicker? Doing your own bookkeeping gives you much more control over your business. Mm-hmm. It just makes it you're more in control. We don't want to be in control of your business. We want to help you control your business.
Are you saying do your own bookkeeping? Are you saying physically do it yourself, or get a bookkeeper to do the bookkeeping, to bring someone in to actually do that you know, that tax.
We can do it for you, and yeah, you'd still have the control. But I just think sometimes to understand it better, we would show you how to do it, and we are there to help if you need any help. But actually doing it yourself gives you a better understanding of your business and how it works. And we will do it. Some people try and do it, and I mean, QuickBooks, it makes it out to be easy, and it is easy if you know what you're doing, but you've got to know what you're doing. Otherwise, you start double counting stuff and all sorts goes wrong. But just having, even if we do it for you after a while, when you decide you don't like doing it, and you need time to do other stuff, at least if we do it and you understand the process, you can go onto your bookkeeping package and you can just look and think, oh, right, so my profit this month is, yeah, I've made some money this month. And then go through understanding things like margins, and my margins okay. It just gives you a much more, you're less likely to need somebody like yourself if you do all that.
And that's what this is about. It's like literally most, most insolvencies, they perhaps could be avoided. You know, it's like stuff that, I mean, the big thing you talked about before, the difference between cash flow and profit. You know, how many directors do you see? They've never run a business before. You know, they might be all right at doing what they're doing, but it's all the stuff when the money comes in, the management of that money causes the problems.
Yeah.
So go on. What is the difference between cash flow, profit? Talk us through that.
Right. So the difference between cash flow, well, so like if you put all your stuff on and at the end of the month you get your profit and loss, and it says, oh, you've made £10,000 this month. Oh, brilliant, great. So if you want to go out and buy something really nice for your other half, you might think, oh, I'll buy that now. But what you're not realizing is you've got that profit, but how much are you owed in? Mm-hmm. So the cash flow is always about what you might have. You might have a £10,000 profit, but you might have people owing you £10,000. So even though you might have money in bank, you've got £5,000 to pay out. So the money's not actually there; it's not physically there. And it's like when you look at your profit. I mean, I've actually been guilty of that sometimes, thinking, oh, good profit this month. Not gone out and spent it, but just being really like, oh, great, loads of money. But then it don't come in. Yeah. So it's like, if it don't come in, it's not yours, is it?
No.
It's just understanding the difference. It's just understanding that cash flow is more important than profit, and getting that money in is more important than your profit. Profit's good, and if you know you're making it, that's absolutely fabulous. But if people aren't paying you, then you don't have that money. You haven't got the cash. So you could be a millionaire in profit, but not have any cash. And then it's thinking about all your other things, you know, your VAT.
Well, we're going to come on to that, right? But, you know, like doing cash flow projections, you know, cash flow forecasts. How important, I mean, first of all, what's a cash flow forecast? Just for people out there that don't know, in simple terms.
So it's where you're looking at. So say at the minute you've got £10,000 in bank, which seems great, doesn't it? Because you could go out and spend it. But then if you project your cash flow, like you estimate your sales for the next few months and estimate how much you're going to be spending. So you've got your wages, you've got anything that you need, like software, everything that you need to be spending. Then you've got to estimate how much you've got coming in, how much of that money is actually, like I've got debtors on my aged receivables at the minute that I probably don't think are ever going to come in, but you know the ones that will. So it's estimating when they're going to come in and just making a nice little spreadsheet. We all love spreadsheets, don't we? A nice little spreadsheet with just a balance of what you've got, how much you expect to come in and how much you need to pay out. Now, if you forecast that, so obviously you've got your VAT, you've got your corporation tax, you've got your PAYE, and make sure that you slot those figures into your cash flow. then you're going to know at any given time how much you think you should have. And if you've not had enough money coming in, then obviously you're going to have to squeeze a bit, aren't you? Which is what I always have to do every quarter when it comes to VAT. Hate VAT.
Now, if you're a small business owner or even a big business owner, I mean, I've seen some really big businesses that are making, huge makes. How would you be setting up? You've talked about QuickBooks, haven't you? What would be your suggestion if you want to sort this out in 2025? Because this is when this is going out, early 2025. Where would they start? What advice would you give to somebody?
My advice is always, it depends though. If you're small, like a bricklayer, they don't need to worry about things like this, because they get the tax taken off at source, don't they? So, but if you're a small business just starting, maybe QuickBooks is too expensive, but keep everything on a spreadsheet. Everything you buy and everything you sell, keep it on a spreadsheet and keep an eye on it. And just I would have said every night for 10 minutes, just go on there onto your spreadsheet. How much sales have I had today? How much do I need to pay out? What bills have I had in? And it's common sense. Just keep an eye on it and think, but I know that I've got to pay something in a few weeks, so I can't be spending everything that I've got in this week because I need to save a bit for that. And a lot of ours always go, should I put some money away for tax? Well, yeah, always. Because if you put some money away for tax, 20% of your income, if you put that away for tax when you're a small business, when you come to pay your tax bill, you're going to have some left over, without a doubt, because you're not taking account of your expenses.
Yeah.
So that's always a good one. 20% of whatever you've got coming in, put it away. Just put it into a savings account where you can't get to it. Then when you get to your tax bill, because of the way the tax year works as well, and you get 10 months, is it? 10 months to pay your tax. That you've got your 10 months in front then, aren't you?
Yeah. So would you say 20% is the figure? So like I say, we get £1,000 plus VAT in, you put £200 to the side, you put £200 somewhere else, you're left with £800 of that £1,000 invoice to run the business.
Yeah, we tend to say that. I mean, it is more than you'll need, but they always think in the mind, 20% tax. I mean, you're going to have your national insurance as well, aren't you, if you're self-employed? So 20% is always a decent figure, I think, just to put away and keep to one side.
Now, with regards to HMRC, you've touched on that. Okay, we all see these issues with HMRC. How do you think, why is it so common for a small business to get behind with the revenue?
It's just too easy, isn't it? Especially, I think the worst one's VAT, definitely.
Yeah.
Because you've got all this money coming in and you don't, I think what a lot of people do, they see the money coming in, they know what they've got to pay out. And then there's some kind of mental block on VAT. And there's so many people we do books for, when you give them the VAT bill every quarter and it's too much. I know, but that's what it is. And you've got to understand that when you get that, you get £1,200 in, £200 of that money's not yours. It belongs to VAT man, doesn't it? And everything that you pay out, 20% of that you'll get back from VAT man. So I think it's so easy for people it's a big hit every quarter.
Yeah.
And it's when you get
they don't shout straight away, do they? I mean, you cannot pay two VAT quarters with fairly little from the revenue.
Yeah.
And then in the third quarter, they start to eat. I mean, I've seen people go a year without any significant issues from HMRC. And when I speak to them, they're like,
"What's longer than that?"
Yeah, it's
and then before you know it, you've got a massive debt.
Yeah, and it's hard to get from behind, and the revenue. When it gets to that, people will go into ostrich mode and they bury their head in the sands and they're like, they don't realise how serious owing HMRC can be. And it's like, they don't hear anything from the revenue, so they just think, oh, well, it's not really a problem. And then out of nowhere, the revenue are in their premises, they're taking control of goods, they're winding up companies. And it all sort of boils down to your first thing is basic financial management. You know, when that money comes in, putting some here, putting some there, when the bill comes, there's no surprises. You're going to get a VAT bill every 3 months. You're going to get a corporation tax bill if you're making a profit every year. You know, and when them bills come in, you've touched on it before, it's not down to the accountant to make you to pay them, is it?
No, we can tell you what it is, but that's it.
With regards to sort of common accounting mistakes, right? What are the biggest ones that you see small business owners make, and how can they avoid them?
Right, so probably the biggest one is not looking after cash flow, not keeping an eye on the cash flow. And I just think with everything, cash flow is so important, because that's what actually keeps your business going, is the cash flow. And just not like I say, not monitoring it. Some people will go all year, won't they? Just doing the sales, buying stuff. Then they'll come and get the tax bill, and it's like, I didn't expect it to be that much. That's a good one. I haven't made any money. But you have made money. No, I haven't. There's nothing in my business account. No, because you've spent it all. And the other one is, when you're a director, it's a really big one, actually, because you'll come to do the accounts and the director's loan account's up there at 30 grand or whatever, but the profit's only 20. And it's a kind of, so that, and then you know, once you see that, well, they haven't paid the VAT, it's behind with the corporation tax. And it's just that, it's really frustrating, actually, sometimes. And then when you try to explain it to them, it's just a distinct lack of understanding that is not your money. It doesn't belong to you. You know, once
we have got to get into this, because this is the number one problem for me, for directors who come across my path. So, right, we're talking about overdrawn directors' loan accounts. Now, first of all, can you explain what is a director's loan in really simple terms? Talk to me about it.
So when we're doing the accounts, any money at all that goes to or from the director goes into a pot, and this pot's called the director's loan account. And at the end of the year, we do the accounts, and the pot stands at whatever, and we'll offset the wages that we've put through for them. And then whatever's left needs to be declared as a dividend. Otherwise, you start with an overdrawn director's loan account, which you have to pay extra tax on. So that's basically all it is. It's like a little bank account for a director, I suppose.
Okay, so just going to dig into that a little bit more. When you say declare a dividend, right? Declare a dividend out of a profit that business has made. Okay. Now, if they haven't made profit, what happens to those drawings that they've continued? You know, let's say they're taking £4,000 a month, 1,000 of it is salary there or thereabouts. So they're taking that extra £3,000 a month, but then not made any profit that year. What's happened to that extra £3,000 a month that they've taken?
Well, they owe it back to the business because it's not their money.
So it's on it goes down as an overdrawn director's loan account. Tell me what tax is on that 30. I'm glad I'm not the accountant. £3,000 a month.
I'm going to be really. It's section something tax. I can't remember.
455 tax. Yeah,
that's the one. And you actually pay extra tax on that, and it's a lot of money.
It's about 33.75%,
which is like 40% tax for dividends, isn't it?
And here's the next thing, though, right? And people don't get that. if you have not paid your corporation tax bill from last year, you was insolvent last year on the basis that you couldn't pay your debts when they fell due.
Yeah.
So it's very hard to declare a dividend from a business that's actually become insolvent the year before.
Yeah.
Now, if you keep trading, you've got this massive tax bill of S455 tax. The business is struggling clearly. The government are going to give you another tax on your corporation tax bill that's going to bring you to your knees. Now, then you might end up with somebody like me. And what people don't realise is this overdrawn director's loan account will become payable to a liquidator if they go for an insolvency process. Like, and the people can't be swept under the table anymore. That's the problem. I mean, I'm not saying that. I've heard stories, okay, that years ago when when you didn't have to put your real-time submission in every month, there were accountants that may change what a director's taken as drawings, put it all through the salary, and on insolvency there'd be a big PAYE debt. Now that can't happen because it's the first thing an insolvency practitioner is going to check. It's just kind of red flag. But if you've got an overdrawn director's loan account directors out there and you go into insolvency, the insolvency practitioner is going to ask you to pay it back. I mean, how scary is that?
Terrifying, isn't it? Because if you think, if somebody's doing like £30,000 a year, mind you, how are they getting that money if they've not made a profit? Are they taking loans out?
Well, I suspect they're taking out. They're taking out the VAT. They're taking out the corporation.
And the corporation tax.
They're just ripping it all out of the company, aren't they? But it goes back to, if you had a good bookkeeper giving you a profit and loss every month, and it's showing you in big flashing lights you're making no money, I don't think it would get away with the fact that people would have overdrawn directors' loan accounts, but I think it would make them more aware of what they are, and they're perhaps going into it knowingly, Joe, as opposed to, ending up in my midst and it's like, listen, you're going to have to pay that back. Now, I want to come on to it though. An overdrawn director's loan account is also the biggest problem when it comes to insolvency. The amount of issues that I see with liquidations and administrations that cause directors huge issues. Some of them lose the house. Like literally, this is so serious right now because your overdrawn director's loan account is an asset of the business. An insolvency practitioner is going to ask you to pay it back. Now, if you've got nothing, right, doesn't really, I'm not saying it doesn't matter, but it's not as much of a problem. If you have got a big house with a mortgage, with a little mortgage, you've got lots of equity, if you've got lots of personal savings, if you're wealthy on paper, a director's loan account that's overdrawn in an insolvency you could lose everything. You could, and it happens all the time. So this is the part of the conversation you've got to pay particular interest to. It's really, really serious stuff.
It is really serious.
What other mistakes are you seeing people make?
Just not understanding, the margins, net profit, gross profit margins, not really understanding what that means. And like, if I think everybody has that, I'm buying it for this much, I'm selling it for that much, that's fine. And you're making this, but a lot of people don't understand that as well as the gross profit margin, which is what you're buying it and selling it for, what about your net profit margin? How much do you need to sell something for to break even or to make a profit or to make a living? And I don't think people think about that. They just go at it. Oh, I've bought that for a tenner, I'll sell it for 12 quid because I've made a profit. And I bought loads of them all. And I just don't think they just go at it without researching and understanding what it is they're getting into. I always used to say when they let you go self-employed at HMRC, we've had loads of people that have set up self-employed and 3 years later never started, but they're getting fines because they haven't done the tax returns. And it's just like HMRC just let them set up. No questions, no like, I always think there should be some kind of guidance at the point when you set up self-employed with HMRC. Not that you have to go
listen,
look
I'm
for
with you.
yourself, but something that would give you, because that people just set up and they don't understand what they're getting themselves into.
And because it's not really there, it's on them now, isn't it? It's on, if you're watching this, this is all on you to find the information out. And there is a good accountant based over Morley Way that might be able to help you. We'll give her our details at the end of this. With regards to, we've talked about managing cash flow in a small business. Can you give us some effective strategies for a business to manage that cash flow? What can they be doing?
Right, so I would monitor it regularly. Always make sure you've got a little bit of a cash reserve. Depending on the size of your business, it'll depend on how much cash reserve you've got. So like in mine, I like to make sure I've always got £2,000 in bank, just so that if anything goes out, I'm not incurring any charges or anything like that. Encourage people to pay faster.
Yes.
So we use Go Cardless for direct debit, offer credit card payments. Ours is through PayPal. It's not cheap, but it's cheaper than people not paying. Make sure you negotiate payment terms, because a lot of big companies that are dealing with small people will go like, oh, well, it's not, our terms are 90 days.
Exactly.
Well, if the 90 days, don't use them. Don't supply them in my unless they'll go lower, because there's so many out there that they use small. I think a lot of the bigger businesses use the smaller businesses for their cash flow.
Yeah, she'll be back
by not paying them on time. And then another one that's quite good is factoring. If you need, like if you have got long payment terms, or if you are struggling with the cash flow and people don't pay as quickly, factoring's expensive, but it's a way of getting the cash flow in. So like they give you, if you put every time you send an invoice out, you send it to your factoring company and they immediately release 80%. And when that client pays, you get the other 20. They do charge interest and they have charges, but if you're struggling to get money in, then they're probably the best. That's one of the really good ones to use, because there's two different kinds of factoring. And the one that's the full factoring service, they chase the debts as well. Because when you're a small business, I don't know if you know anybody else that's same, but like a lot of my clients think I'm the friend. So trying to chase money from your friends is really difficult. Really difficult.
Yeah. I had this chat with my mate yesterday.
Like you what?
Yeah, I had a chat with my mate yesterday. I said, listen, you need to get somebody else in to do this. So, Joe, like the credit control issue you raised, I was having dinner with a friend yesterday, the guy from Thornton Cleveland, actually. And
really?
he is a service business, right? So there's just him. And he's very, very busy, and he has an absolute nightmare with his credit control. And because he knows these people, we have regular conversations thinking like, am I being too pushy? Like, what do you think? They were meant to pay me a deposit on Wednesday, and obviously there's only one of him, right? So literally, it's not like whatever he does himself. You understand the dance. Talk to us about what advice would you be giving to my friend who has got a good business on paper, but spends a lot of mental time thinking about when people are going to pay him?
Get somebody else to do it. I don't know if you. I think you know. You know Will, don't you?
Of course, yeah.
Will Polston.
Yeah.
If you can't, it might need to be done, but you don't have to do it. That's one of his favourite sayings, and it's so true. It's so true. It's even just virtual PAs. Get them to do your credit control and your contracts and your paperwork, so it separates you from that actual side of it. It makes I'm looking. Go on.
No, go on, Jo.
Go on. I'm lucky now because I've got staff. So like now one of my members of staff does that. I don't get involved and I let them do all of that. I might have a couple of clients that'll come and complain, but I'm soft as well.
Yeah.
So it can be really difficult. Can be so difficult to manage it when you are a soft person. But then at the end of the day, you've got to think to yourself, hang on a minute, if I did something for them, and you'll always find that the ones that don't want to pay you are the ones that would be banging on your door for you to pay them, sorry.
Yeah.
And it's just got to toughen up a bit, haven't you?
Yeah, it is. And it's like, if you're offering a great service, you shouldn't be scared about asking to be paid. You know, it's like, but I've really struggled with it over the years. And like you, I am soft, and I can be really gullible. You know, like some excuses I've heard, it's like the equivalent of the my dogs ate my homework. You know what I mean? And it's like, but what are there any other? We were talking about strategies for managing cash flow in a business.
Yeah, make sure your invoices go out straight away. And especially when you're a service company like your friend, like we are, I could do a set of accounts and then completely forget about bill because I've moved on to something else. And it sounds ridiculous because it's your bread and butter, isn't it? But when you're busy, it's so easy to like just carry on with something else and think, right, great, that's done, move on, and then forget to bill. So like we've put processes in place now where as soon as you finish a job, we have to do like annual checks, annual review, bill goes out, and it's made cash flow better because the bills are going out immediately. I mean, I've got some clients that can be 2 months before they've sent a bill out to somebody, and it's like, well, why? Oh, well, I just forgot and I got busy. I'm so busy. But what's the point in being so busy if you're not getting any money back for it?
Yeah, listen, we can be guilty. I mean, we use a CRM, so it sort of helps. I used to work with a guy who never ever used a CRM. He would store everything in his head, and I just thought, you know, that's the type of stuff that will wake me up every now and again. You know, if I let that not that important but needs doing list build up, and then I'll wake up at 3 a.m. because all these these unclosed loops in my head just get too much for my little brain, and it goes, Chris, crisis at work. It's not I just need to get in and have a day getting everything fixed. But I found like a CRM for me is really helpful, and when I can be on back to back and back of calls. At the end of that call, I mean, I'll have a pay books of like notes sort of about what a call was, and then I'll transfer that to my CRM. You know, I'm not totally paperless yet, but it's mad, isn't it?
We've got like we have a list of jobs that we need to do, but I still write all mine down at side of me.
Yeah.
Even though it's on computer.
I think there's something about scratching it out, going, yes, I've done it.
Satisfying. Yeah, definitely. What else then? Oh, I would regularly review your pricing as well. Make sure you're charging enough. And because a lot of people don't.
Well, if we look at like the last, the last few years, the cost of everything's gone up. I mean, how many people have been caught short because of this?
Yeah, exactly. And if you're not reviewing your price, and obviously minimum wage keeps going up. That's on the rise all the time. And, you know, people should expect you to be increasing your prices to cover these things.
And you've got to look at, I think it comes back to the difference between net profit, gross profit, what are the cost of sales? And again, it all feeds back into the same key point, isn't it? Is understanding your financials. So sort of to move swiftly on to that, what for you are some of the key financial indicators that business owner should regularly monitor? So obviously, you've mentioned their pricing, cash flow, anything else?
No, I think probably stock. Make sure you've not got too much stock, because if you have too much stock, your money's all there in the stock, and your debts as well. Make sure you've got if you have to borrow money, make sure you're getting the best deals, and if you're not, move on to the better deals. I feel like Martin Moneyman now. What's his name? Martin Lewis.
Martin Lewis, yeah.
Yeah.
Here's the problem that people I see is your first port of call will always be the banks, won't it? The banks on the high street were normally the best rates. But as a business starts to slow down, your pool of lenders shrinks. And I'm not going to name these lenders on here, but there are certain lenders who will almost lend to anyone if you sign a personal guarantee. And for me, you have got to be so certain that you are getting out of this short-term difficulty, or your gamble is a really well thought out gamble for growth. Because I see people who are trying to grow who take on additional investment that need to be backed by some type of personal guarantee. Because these lenders are generally high interest rates, you've got to factor that into your cash flow. Back to our original point, having a look at that bookkeeping. What is your cost of sales? What are all your costs of going to work? What's them cost of interest on your monthly profit and loss? Because if it goes to hell in a handbasket, you're on the line for that. You've signed a personal guarantee. Your personal assets could be at risk if you default in that loan and the business goes, goes pop. So really, really important. Be careful with PGs. I mean, we've sort of touched on this earlier, but I want to go over it again. How important is it for a business owner to separate their personal and business finances? Okay. And what are the best practices for doing so?
Right. I think this is one of the most important things, because if we get a lot of people, limited company, which is probably the best example, because they go out, they've got the business card, and everywhere they go, they use the business card, and they start setting up all their own personal stuff coming out of there. So number one, when we're doing your books, it's going to take us longer because we've got all your rubbish going through there. We also pretty much know what's going on in your life, to be fair.
Yeah.
And what makes you tick, to be honest. But it's like, have a separate bank account for your business, because if you're spending money out of there willy-nilly, you don't really know what you've got and what you're making. If you say to yourself, right, I'm going to give myself £2,000 a month, and you put that in your personal account, then if you've got a bit extra end of month and you've got no cash flow issues going forward, then give yourself a bit more. But at least you can see what you've got, and whether you and that's a classic example of, well, I'm not making any money. But you are making money. It's just that you're spending it all.
You're spending it.
But you don't know you're spending it all, because you're just spending it through your business account, and you're not paying yourself much because it's all going out of there. It's so important just to keep I can't really explain it properly, because people don't seem to understand that just keeping them separate, it's like, it saves so much time for us, but also it gives you a much clearer idea of what position you're in, because you know what you've got left, and you know how much you're paying yourself, and you know if you're not making money, then you need to look at other things, don't you, to like try and figure out why you're not making money. But at least it's not because you're spending it all on yourself. And a lot of them will go, oh, that were a business meeting. No, it wasn't. £400 at what is it, Nando's or whatever. That's not a business meeting, is it? That's a party.
Yeah. So on
So
these, how do you define like business meeting? How do you define, if you're looking at something and you're seeing money going out at bars and this and that, the other, what are you looking for? How are you questioning that director?
You'd question them by like, number one is if there's no hotel bills or anything like that and it's in London, so there's no hotel bill in there, but you're in London on a nice big meal out. Well, did you go on business? Well, yeah. Oh, so business should have paid for your hotel. Did it pay for your hotel? No. Oh, well, no, I paid for that. And you just ask all the questions like, well, there's only you and you were meeting a client who's also a service provider. Why would you have 14 main meals between you?
Yeah.
Just it's obvious. It stands up and smacks you in face. So then you start asking questions and eventually they'll go, oh, well, no, I went out with my family or whatever. And it's like, that's fair enough. But my other thing is, if you can explain it to a tax inspector and you think he'll accept that explanation, then put it through if that's what you want to do. But I'm saying I don't think it should go in. So it's just, and like, I mean, we get William Hill and Summers.
Oh, wow.
All sorts. And obviously, they're not business unless they're in that kind of business.
Yeah.
We've got some at the minute that are restaurants, and he's got 4 kids, and he goes to McDonald's, he goes to Subway, and
that's research and development, isn't it?
Yeah, market research. That it's like, right. Well, if you think you're going to get away with that, then fine. But I'm saying no. But he'll argue till his blue in face, and it's like, well, just so long as, and I always make sure now that I get an email just saying, just to confirm, this is what you said about these transactions, so that we've got that on file. Then, if they ever, and well, no, she told me I could put it through, but no, she didn't. She didn't tell you could put it through and I've got an email to prove it. But they're just it, and a lot of people. Some people I don't actually think have got a separate business account.
Yeah,
they actually run everything through the personal account. And it is so important to keep them separate for so many reasons. That clarity is the biggest reason, because you can see what's going on rather than having everything, everything that you spend at home going through. And another way of keeping it separate is a business credit card.
Yes. Yeah, get everything on the Amex or and just bill it at the end of the month.
At some point. Get some points and pay it at end of month.
It does. It helps with cash flow a little bit as well, doesn't it?
Yeah. Yeah, and for unexpected things, I suppose, that you're not expecting to happen.
Well, Jo, I've pretty much come to the end of what my the topics I wanted to talk about. Is there anything else that you would like to cover before we start to wrap this up?
No, I think that's they were really good topics, I think. And they cover most of things that frustrate me as an accountant.
Well, you've been a really, really good guest. So where can people find out more about Jo Gardner of JLS Accounts?
We've got a website, which is www.jlsaccounts.co.uk. And we're on Facebook and Instagram as well. In fact, I think on Facebook and Instagram, it introduces all staff on there somewhere as well. So you can meet everybody, even my dog.
Well, we'll put you on the show notes, and if anybody wants to talk to you, you're open to have a conversation with people to see if you're a good fit.
Yeah, of course. No pressure.
It's been a pleasure. You've been a great guest. Thank you for joining us today, and have a wonderful rest of your day.
Yeah, you too. See you later.
Thanks, Jo. God bless. Bye-bye. Bye-bye.